Welcome back to the Stock Estate, everyone, where we learn how to swing trade with risk management. And in today's video, I'm not going to talk about swing trades. I'm going to talk about one of my long-term investments which just blew up recently. And that company and that stock is none other than Rocket Companies, which skyrocketed, as you can see right now, more than 71% last night. And pre-market right now is up 8% and more. So it is quite a crazy ride. Okay, so I was waking up this morning and I was rubbing my eyes. Right, I was like, oh my god, wait. Yesterday was kind of like a red day, kind of, but my entire portfolio was very, very green. So I was very confused, right? And I was really, really shocked because I was actually accumulating a lot of shares of this company back when it was in the $20. Actually, it was 2 months back. And I really loved the business and its fundamentals, and I really, really loved that its management team. And later, I'll just give you a very short breakdown of my bullish thesis on Rocket Companies to reiterate. But it is a $40 billion company, market cap company. So I didn't think that a short squeeze was kind of possible with this company. Okay, I knew that the short flow was pretty high, but it would take a lot of funds, right, to short squeeze this stock itself. So most probably it was retail investors plus hedge funds, which was directly buying heavily into this company. And this company has a lot of strong fundamentals, which I think after the recent earnings call, it has kind of revealed itself to the public, and people start to think that, oh, okay, actually this company is really, really awesome. And especially the bigger funds, I think, start to move into this company, and hence started squeezing all the shorters that are shorting this company, and hence created a GME-like squeeze. So in this video, I'm just going to cover about what my thoughts as a person that's already holding a lot of shares, a lot of shares of this company, and what I'm going to do with all these shares. Will I sell? Will I buy? Okay, and if you're not in this company yet, should you buy or should you buy or should you sell? All of these, okay, I'll cover in today's video. So let's take a look at the charts, right? Okay, so I've been accumulating a lot of shares, right, around this area over here, okay, all the way over here, okay, and always, okay, I was actually texting, okay, my dear friend, right? So the ones that I actually know after I left the financial industry, okay, I started, not really advising, but for me, I would just recommend stocks that I feel that are very, very strong in its fundamentals, and to my closer friends. And I said to them, whenever it dips below $20, okay, it is a absolute buy. Okay, I couldn't resist. Okay, especially before the previous dip, right? Every time it dips a little bit, I bought more. Okay, so you can see, right, this has been consolidating for so long. Okay, it has been consolidating for at least, you can take a look, right, it's at least 3-4 months, right? So again, and even 3-4 months isn't super long when it comes to long-term investing. So that's how the difference is of long-term investing versus swing trading. Swing trading, want to take profits within from 1 day to maybe maximum a couple of months. We want to take our profits already. But however, okay, for long-term investments, you are playing it on the fundamentals that it will consistently beat its earnings, and it will consistently raise the value, okay, of the stock back to its fair value. And that's how actually long-term investment works, right? Because you are betting in the sense that the company will surpass expectations and will continue to jack up and correct its price earnings to its actual growth of the company. Because what's happening is that sometimes companies, right, there can be a lot of good news or bad news in between earnings. Okay, so it can be super volatile between earnings, and that's what the swing traders are there for. Okay, we capture the swings in between earnings, right, for the volatility sake. But however, for long-term investments, right, earnings are a very good way to correct misunderstandings or volatility. So by earnings, right, everything will correct to the fair value, because the earnings call will review everything and will review the true nature or how well the company is actually doing, as well as guidance that the company gave for the future. So Rocket Companies, very solid company after its earnings, okay, explosive growth, okay, and it skyrocketed all the way up here, $42. So now, this poses a question again. Okay, so again, this is the question that everyone's thinking, including my subscriber, right? Where's my subscriber? Okay, my subscriber right here. Okay, that says that, Simoa, right? Simoa, okay, I actually recommended, or I didn't really recommend it, but I dropped it, this company, actually variously, okay, way from my first few videos, Rocket Companies, okay, I've been mentioning it from time to time, okay, here and there, everywhere. I made a video about it as well. This is the video. Okay, it wasn't very popular, but some of them actually caught it, okay, like Danelle as well as Simoa, okay, and Simoa, this is a video, I guess, more on the videos to address the questions, that my viewers will have. And basically, what should you do now? Okay, what should we do now? Okay, for me, okay, you can see that right now the RSI is way oversold, right? 92 is way oversold. It's crazily oversold. So spiked way outside of the Bollinger Band. Okay, and again, when it spikes out of the Bollinger Band, right, what happens? Normally, okay, I think my viewers will actually know. Okay, most of the time when it spikes out of the Bollinger Band, within 1 or 2 candles, which is 1 or 2 days, it will reverse heavily back. And this time it's not just a small little candle, right? It's a huge candle out of the Bollinger Band. Okay, so again, you must not be greedy in this kind of point. Then most probably what I would do, right, is I will start to reduce my positions. Okay, and I will do it via maybe a trailing stop loss, because again, you never know. This, looking at the price movement now, it could very well squeeze to maybe $50, $55, which is also quite a significant amount. It could mean tens of thousands or $20,000, $30,000 for some. Okay, so I do recognize the fact that you want to maximize upside while limiting your downside. So again, for these kind of companies, right, what I would do is I will actually set a trailing stop loss. Okay, and my trailing stop loss, right, would be, let me just draw it out for you. Okay, this is what I did after calculating, the volatility of the company using something called the ATR, which is a average true range, and I found that I'll set my stop loss range to be around $2.70 to maybe $3. Okay, so again, if this is the gap, right, of the trailing stop loss that I'm going to put. So again, if the stock dips $2.70 to $3, right, okay, then I'll exit out of the trade, okay, at least majorly like 70%. But again, this is the point, right? I'm looking to buy back in at the lower price after everything kind of calms down, okay, because again, although this is a long-term investment, right, but this is a absolutely different scenario that I've envisioned in my head, because again, this is I forecasted this company to grow to around $40 in probably maybe 2 to 3 years time, but however, it reached $40 and above, right? Now it's $45, right, in a single day. Okay, I mean in like a few days. So it is really it's pricing in, right, years and years of growth ahead of them. Okay, and before that, they had really nice, sales numbers, valuation. But right now, I think the fair value of this company will be roughly around $30. Okay, I don't see it going below $25 anymore, because the recent earnings, right, really crushed it. Okay, its fair value should be above 25. So I can see that, if a lot of people start to panic sell and everything, right, it would kind of drop back to around the $30 range, $30+ range, and just hover around there. So again, right, it's up to you whether how much profits you want to take. Okay, I'm here just as a guide for you. Okay, you don't have to follow everything I say. Okay, and this is not financial advice. Okay, I just want to be a good friend over here, and just share a few of my thoughts on what I'm going to do. Okay, so again, I'm probably gonna exit. I'm gonna put a trading stop loss on maybe 80% of my positions, but I'll be looking to buy back in because this is such a good company. Okay, anytime it dips below maybe $30, maybe around $25, right, I'll actually load up more to maintain my position size, because originally, right, this company was around I would say 15% of my portfolio, right? Quite hefty, actually, quite hefty. Okay, quite a lot of shares were put into this, right? Around 15%. So in a sense, after this pop, right, I bought a lot of. My average cost was around $20.10, I think. Okay, and after this kind of pop, right? So it more than doubled. Okay, it kind of 150% my money, right? More than that, I think 120% to 150% my money, right? So this kind of pop, right, increased that portfolio position to around 25% of my entire portfolio, which is quite a lot. So again, this is about rebalancing. It's not about, I don't believe in this company anymore, I want to sell all this company. Okay, so again, long-term investment, I always encourage averaging down, but this, I must admit, is a very, very unusual situation, having priced in so many years of the growth. So again, take some profits, okay, but I'll be looking to buy back in to maintain a certain percentage of my portfolio. So again, this is what a lot of fund managers do as well. They sell, they buy into securities that are pretty good as well. So they balance between different kinds of plays. So again, when this play is too overvalued or risen too much, they sell, they buy into companies that are undervalued. Then when that rise, they sell and they buy into another company that's undervalued. So they switch between funds itself. Okay, so they rebalance often to maximize their gains. So this is a habit that I picked up in my financial days, and I think that this is a very useful tool for you guys as well. So again, rebalancing is two. And if you want to know about, want me to talk about more of my long-term investments, right? My longer-term investments, right? Okay, do drop me a comment in the comment sections below to tell me that that you want to hear more about my long-term investments, because this channel is mainly a swing trade channel. Okay, and I think a lot of people like my swing trade videos because I think so far what I like to preach is educational content so that you can learn how to fish yourself. You don't have to depend on anybody else, any other YouTuber, any other person around you. You can make fair judgment for yourself. That's why I feel that, when Simoa said that she did her own research, right, and she bought, right, I was very happy because I want you to do your own research, okay? Don't just listen to anyone blindly. Do your own extra due diligence so that you have the confidence, right, to hold through all the dips. Because example, right, if you didn't do your own due diligence, right, and this company was just fluctuating, right? Like it was around here, right? Then from $21 it dips to $19, then it dips up again, down again. Basically no movement at all because it was so heavily shorted, right? Even when I thought it was about to break through $24, right? It got shorted back down again to $19, which is horrible for such a good company, right? But again, it just keep getting shorted, right? So if you don't have like you didn't do your due diligence for long-term investments, right? You won't have the conviction to hold through all these kind of down periods, okay? And conviction to add more because you know that the value of this company is more. Okay, so again, long-term investments, buy and average down, buy and average down, buy and average down, okay? Then when it really risen too much, right? 100%, 200%, 300%, right? Okay, sell a little bit, okay? Maybe, and look to buy back in again at a lower price. Okay, that's what I can say for this. Okay, and again, some bullish points again for this company. I keep saying that it's very bullish, right? So let me just give you a brief points about why it's so bullish. Okay, firstly, right, I can tell you that it is a technology company. Okay, it's half technology company because this company not just deals with the mortgage side. Okay, they are trying to use technology, AI, data, right, to actually streamline the process as well as collect data points, right, so that they can give out mortgages, right, and refinancing very, very quickly. So again, it is I would say a little bit of disruption to the traditional mortgage, which are a bit slow because they have to go through a lot of refinancers, right? They have to find all the information about the person, whether they're able to take on the debt, they're able to how much risk they're able to take, okay? What is the debt coverage ratio? A lot of things that they have to take into account, right, when they want to refinance that debt. So this process takes a very, very long time. But however, with technology and information, right, all this information comes very, very fast, okay? And with more and more people adopting that technology, the more data they have, the faster they can issue out these kind of loans. And again, this is very bullish for the company. So half technology company. So again, it's not valued as a tech company. So if they are valued as a tech company, it should be valued way, way more. And second, right, it's very, very highly diversified, okay? It's a super diversified business within its sector, okay? It has many different sectors such as car auto loans, okay, quicken loans, okay, and they have quite diversified business within its own industry. And that's the second one why I think it was a good company. And it's a $40 billion cap company. So again, it's a very huge company. It's not those small caps, right, that are just started growing a little bit, okay, burning a lot of cash, not sure whether they have enough finances to push through the future, right? It's quite speculative. But this company has a lot of cash. In fact, they just issued a share buyback, right, to buy back its shares back to its own company. So they have a lot of cash. So I have no worries about this company, right? Maybe crashing and burning, okay, for at least for the next 5 to 10 years, because this company is solid base, solid cash flow. I read through everything. So again, if you want to look for a long-term investment, right, you have to do the work. Okay? You have to really find its own cash flow. You have to read through all its cash flow statements. You have to look through all its 10K, 10Q, as well as look at all its earnings call and transcript to get a better understanding of the company that you are buying into. And also, next, right, it was before the pop, right, before it popped at $20, right, it was at a very fair valuation. Okay, its price to sales ratio was around 3. That was very, very low. Okay, anything below 5, right, for price to sales ratio of a high of a semi-growth company, right, it's pretty good. But right now it's around slightly over 5. So I think right now is reaching almost its fair value, pricing in almost like a few years of its growth. But basically before that was a fair valuation. Okay, and right now, right, it has also a lot of good growth and customer acquisition, as you can see from over here, right? This is the transcript, right? A very basic transcript, but I actually listen to it, right? But a few numbers that I can give you is actually they generated $16.9 billion of adjusted revenue and $11 billion of adjusted EBITDA. Okay, and they have actually for the full year 2020, right? They generated $320 billion of closed loan volume and increased 121% year over year. Okay, that's insane. Okay, and again, Rocket Auto, right? They're diversified business, right? Their auto retail marketplace, right, also generated more than $750 million in gross merchandise value. And a lot of good numbers over here. I don't want to jump too deep into this, but if you want to go, you can go look at their transcript. You can to get a better understanding. But basically, very, very good numbers that they posted. Very, very impressed. Okay, that's why I have the conviction to buy more inside. And yeah, really, really happy about this. Okay, so yeah, okay. Right now, right, so again, for those who are already in the stock, right, I would say, what I would do is I will put a trading stop loss on quite a bit of my positions, okay, of $2 to $3. Then after that, I'll ride it through. If it falls a lot, you start exiting, a lot of people start panic selling, I'll also exit my trade as well, and I'll look to get back in to maintain my original portfolio size. And for those of you who are looking to get in on the hype, right, to swing trade or to trade rocket companies, right, I would say what I would do, right, if I wasn't in, right, I won't do it right now. Okay, either for swing trade or for a long-term investment for now, because you want to wait for it to come down a little bit. Okay, what do I mean by that? Okay, so take a look now, right? So it's trading so way high up already, right? Okay, again, wait for it to come to you. Okay, wait for all the volatility to settle down. Okay, all the panic sellers or the people who just here for the quick buck, right, to get out of this company. Okay, wait for it to come down. Okay, until those who are left, right? So everyone, definitely a lot of traders around here, a lot of traders, right? That will sell, and you will just sell. So when it hits a point, right, where all the sellers or the swing traders get out already, right? What is left are the institutional investors plus the long-term investors such as myself, and then okay, you can start to build your position. Okay, but again, wait till all this volatility and all this drama about the short squeeze and everything is over, and also wait for this bar over here, right, to come back down into the Bollinger Band before you try to build your positions for a long-term investment or for a swing trade. And that's it. That's all I have for you today, guys. So I really hope you guys enjoyed this quick video, okay, that I want to make for you. So it's like an update, right, on this for you guys. And again, drop me in the comment section below, if you'd like to know more about my next long-term investments that I'm actually putting in. Okay, then if I see that there's a lot of people who wants to hear from me from that, then I might consider doing videos on that as well, in addition to my swing trade videos. And otherwise, smash the thumbs up button, subscribe to my channel for more of these kind of videos, and as well as, if you want to check out on my top 3 swing trade stocks every single week. I do educational content, I do tutorials, I do valuation tutorials, I do a lot of tutorials for you guys, as well as my own personal process on how I analyze companies. And without further ado, I shall wish you guys a good trading day ahead, and I shall see you guys in the next video. Stop and stay up.